Hello again, everyone. This is Andy here looking at the markets. And of course, we are looking at a quiet market to begin. Right now, we've got the European Open. We got about an hour before the London session open. But just to give you a quick heads up, just trying to get an idea about what we're trying to look at. Quiet right now, to say the least. It's Friday, 31st of August, and the anticipation is that maybe there's going to be some sort of a squeeze into the close today. At this point, I'm just waiting to see what happens. It looks like the Swiss franc is on the move. Swiss franc continues to show a little bit of weakness. Let's go ahead and take a look at the charts. What you're looking at right here is a dollar, or this is my dollar dashboard, and the charts here are on a daily time frame. Anyways, the charts are on a daily time frame, and right here up at the top left you have the dollar index futures, but right next to it you have the Swiss franc. So let's zoom in here, and you can see the Swiss franc has been on a downward trajectory over the past number of sessions, but what I wanted to emphasize is this very last bar right here. You can see that we are actually trading below the low of the previous day. And in some senses, that is that's a breakout, right? So we can at least argue that we have broken below the previous low at 96.84. Right now, we're currently trading about 10 pips below it. But the market did trade down to 96.70. So in a sense, here we are making another low in the Swiss franc. You can see though yesterday that the market did make an incremental low, but did not really make a substantial move off of that trade. And this is kind of one of my favorite setups, is to look in the direction of the trend. You can see the trend is going lower. Therefore, what I like to look for is a break below the previous low to see if there's a trade to actually take. Now, in this situation, the market is already broken out, but if you do get some sort of a pullback, then that gives you something to trade against. All right, so in a sense, right now, it looks like the Swiss franc is on the move. The other thing that kind of holds me back from trading the Swiss franc is that it's really a quiet mover. I mean, it may move. You can see here that we have been in a 300 pip down move, but it's taken a number of days to actually get there. So after the breakout, which happened in the 21st, you've gone 1, 2, 3, 4, 5, 6, 7, 8, 9 trading sessions in order to get 300 pips. And you know, I guess in some people's eyes, that's probably unacceptable. There's plenty of other trades out there that would be a little bit more volatile, or should I say, you'd get a bigger move out of them after a break. Just kind of looking around the board here. What I like to do is, again, in order to get us a little bit of a kind of an overview in terms of a bird's eye view, I like to take a look at a zoomed in view of the daily chart. This will actually give us an idea about what we can see for the intraday time frame, right? So notice here on the daily dollar, you can see how we're trading inside of yesterday's trading range. And when that happens, the market has a tendency to be a little quiet. So that The dollar index is trading inside yesterday's trading range. However, when you look abroad, the Swiss franc, of course, is moving below yesterday's low. The Canadian dollar is moving above yesterday's high. The Japanese yen looks like it's trying to trade below yesterday's low. So you have a mixture of things going on here. Now, the top row are supposed to be positively correlated to the dollar. In other words, if the dollar is moving in one direction, the ones across the top usually go in the same direction. On the flip side, you have the pairs along the bottom, and you have the euro, the pound, the Aussie, and the Kiwi, and they're supposed to go in the opposite direction of the dollar. So one of the things to notice here is that you have a dollar inside day, and on that note, you also have a euro inside day. You have a pound inside day. You actually would consider the Australian dollar a failed breakout because it broke below yesterday's low, but now it's trading within yesterday's trading range again. Same thing with the Kiwi. We practically have an inside day. Let me just reload my chart and make sure that I'm looking at a decent yeah, so we're basically looking at an inside day here. So bottom line is, it looks like right now we're just waiting for the markets to actually develop. We want to see if these markets will actually give us something to trade, and realistically the idea is to wait for the London session open anyways. So once we can get the London trading session underway, then I believe that you might actually see some action, given that it's Friday. The most important thing is to be a little patient here and let the market actually open up, and at that point then we'll see if this market can actually get some wheels. Remember that the Japanese yen and the Swiss franc are moving in alignment, giving us a heads up that potentially there's another down move coming in the dollar. At the same time, if that is the case, then what I'm looking for is more upside in the pound and the euro, and that's kind of in line with what we've been expecting. So we'll basically keep an eye on this, keep an eye on these charts here, and we'll pay attention to what happens over the London session, because that's generally what I'm thinking, is that you're going to get some action. Once again, the idea is that the purpose of this broadcast is because we really don't want to be trading in the closet. I emphasize the idea that rule number one is that we all have a trading buddy, and the idea is that when we have a trading buddy, that we have somebody there to bounce ideas off of, or somebody to keep us in check whenever we might not be doing what we're supposed to be doing. And in a sense, it also helps to keep a little camaraderie. And as you all know, trading is definitely a lonely endeavor, and it can get to the point where if you are the only one inside your head, you could actually you could should I say, psych yourself out whenever you're trading in general. So ultimately the idea is to have somebody buddy up with somebody that you are compatible with, somebody who mainly trades your style. That way you two can actually be in unison when it comes to sharing ideas, and that way you both are actually benefiting each other. You don't want to have somebody who's trading a completely different style, because then you really don't take interest in each other in terms of keeping each other out of trouble, for that matter. But the idea is that because trading is such a lonely endeavor, you want to team up with others that can help you stay on your game plan. And so with that in mind, you are my friend. I'm sitting here basically tuning in to you, so that way I can keep myself on my game plan, and it just kind of helps me avoid, well, I don't want to say avoid having to do my own journal, but this is my journal, so to speak, is to basically be able to go back and forth and share what I'm doing, and ultimately to inform others of things that of setups that they could possibly partake in. But the most important thing is usually you're encouraged to have a trading journal. So you definitely want to be writing stuff down. You want to be notating things that you're witnessing and all this kind of stuff. So back to the charts, as you can see, this is the idea that what I like to do is pay attention to this grid here on a daily basis. Okay, so you have the dollar on the top left, the Swiss franc in right next to it, and then you have the Canadian dollar, and then you have the Japanese yen. All of these pairs should move in unison in my opinion. The bottom pairs, you have the euro, the pound, the Aussie, and the New Zealand. Now, the way that works is, of course, the emphasis is that we're trading the major currency pairs. Of course, there's derivations. There are derivations of pairs that we could actually be trading, given the when you take a look at the exotic pairs, the intermingling of these different pairs when you cross compare them. But for the most part, what we're paying attention to is the major economies, because they have the most information. They're the most widely traded. In some senses, they're probably the easiest to navigate, in my opinion. So the idea is to focus on the correlation that I have before you, where you could see that the top pairs typically move in one direction and the bottom pairs typically move in the opposite direction. But the anchor is the dollar index, which is the chart up at the top left. So if that's where I'm going to start my I want to either start my analysis there, or by looking at the components, I'm able to get an idea about where that would be. And that's the idea. We'll be able to come back to that in a little bit. But so you're either looking at the dollar index to see what could happen in the other pairs, or you're looking at the other pairs to see what could actually happen to the dollar index. So the most important thing is to limit your scope and make sure that you're not really focusing on 28 different pairs if you're new or if you're struggling. If you're just getting started, or if you're having troubles trying to figure out which direction the market's going at any given moment, then you should probably be limiting your focus to one or two different pairs. And I would even encourage basically just focusing on the dollar, because the dollar is the king of the hill right now. Yeah, we can debate all day long whether or not it's going to last, or people want to get into Bitcoin for that matter. I understand cryptocurrencies are the new craze right now, but the anchor or the idea is to get a solid foundation on how you're trading, to be able to analyze the charts, and to be able to do it effectively. And then you can actually venture off into whatever market you want to, for that matter. So the emphasis is to learn how to actually trade the charts. And then you can use that skill set to trade any market out there. So once again, back to the charts. The idea here is to get an idea about what the dollar is doing. And that should actually help us get an idea about what we should expect in the other pairs. Or sometimes, as you can see, like right now, the dollar really isn't moving. The dollar is actually just trading sideways. But I can see already that the Swiss franc and the Japanese yen are moving. So that right there is giving me a little bit of an insight into the idea that what the next coming move might be in the dollar. Because when this actually starts to move the dollar, well then by definition it's going to move the euro and the pound. So once again, of course, we're trading the London session open. Most of you out there might even be trading the euro and the pound, but given the fact that we are looking at the other pairs, I believe that that's going to actually help us gain some insight into what we should be doing. Another pair that we're watching right now, Australian dollar. Of course, Aussie dollar is trading right on the lows. It seems like it's unable to get off the deck. In the last couple of seconds, it looks like it's been getting smacked. The Japanese yen really is the one that I have my eye on, because it's trading right next to, or right around, the daily moving averages. You have the 50-period moving average. Let's go and take a quick look at that. Let's see if I can actually bring up the chart here for the Japanese yen. So you can see here that when you take a look at the major moving averages, although this is a 240-minute chart, this is a 4-hour chart. This red line is actually the daily 50-period moving average, and as you can see, the market is actually trading right below it. So the Japanese yen right now is actually showing a little bit of weakness. I'm going to take this out of here. You have the idea that when the first thing I have to emphasize is that the 50 on the daily has been relatively sideways, but the market is trading below it, so that will generally actually trigger a selling frenzy in some senses. So what I want to do is keep an eye on this to see if it'll come back up to these moving averages. The green one is the 50 on the 60, the yellow one is the 50 on the 240. So these two moving averages are going to be resistances along with the 50 on the daily. So again, just keep an eye on those two moving averages. And the other scheme of things, I was taking a look. Let's go take a quick look at the Australian dollar. Let's see if I can find it here. Australia. So you can see here that the market is trading back down towards these lows. Nice little crossover, but what I want to see is a move. You would have to push up 40 pips or so back up into this key moving average, or back up into the 72, 77 area. You can see these two previous lows. That would actually bring in some selling. So got to be patient here. Just let the market actually do what it's going to do. Quick look at the pound. The British pound is actually looking like it's ready to make another move higher. So the idea is to, if you're not long here, you got to wait for a little bit of a pullback. I would say down into the 129, or it looks like 129.80, or as low as 129.23, which is the breakout point. You can see this recent high here on the 4-hour chart is actually a pretty good area to look for an entry. And then you have the let me reload this chart. Got some dashed lines here that I don't like to look at, but this is the euro, and it looks like we're actually pretty close to getting up to back up to above 117, and there goes my chart. Let's see. Guess it didn't like the refresh. Changing time frames real quick. Now let's see if I can put it back. There we go. Alright. Again, you have, at least for now, the looks like the market is starting to roll or push back above the 50-period moving average on the daily. The other day we actually broke out above it. Now we've retraced down to it, and we're using it as support. And then looks like we're starting to make a push back off of this this key level. So rising momentum there, should I say, a rising trend in the euro on a short-term basis, at least. You know, you can argue that it wants to go down to 105 for all I care, but right now on an intraday basis, I'm thinking this is actually going to, thinking it's going to pop at some point today. Usually the expectation is probably right around the close of the New York session. That's pretty much the close of the day. Let's, you know, you might have to wait a little while. One of the pairs that I was looking at, just kind of take a look at some of the crosses. It looks like the pound Canadian dollar is slightly up, but you can see that we actually had a breakout above this intermediate high right here, and therefore that actually completed the double bottom pattern here. So you have a low here and an equal low here, and then once you actually break out above the intermediate high, the pattern is complete, and what you're expecting is a move, a measured move to the upside. So let's take a quick look. I have a short-term target somewhere up here around 172. When you take a look at the Fibonacci's on the weekly chart, the 382 is right around 172.86, and that's pretty much my first target. Okay, so that's what I'm looking for, targeting in the pound Canadian. Just to give you guys a little bit of nugget here in terms of something to expect. Let's see if I can get some drawings going. Okay, so that is the size of the box. And so what I would do is put it at the breakout point. You can see here that the height of the box matches the two lows. So I should probably just go ahead and take a look at this here. I'll go copy and paste it. Now you could see that the just want to make sure I'm getting it right. Okay, so again, this right here is the size of your box. Let's see if I can get it even tighter. There we go. Now you can see that you have a low and then an equal low right here, and then you have the intermediate high here. Now this right here is the width or the height of your box. Then we'll go ahead and copy and paste this. And now we have the identical box right here that we can actually take a look at in terms of what our target might be. This is what we consider to be a measured move. So the height of this box right here actually takes us to 71.19. Okay, so the height here, usually what you would say is you measure this box, project it off of the breakout point, and then that's where your target is. So as long as the pound Canadian dollar can stay above 165.88, then the idea is that it should actually push up to 170, 119. That's what is that? 200 and something pips. But that's the measured move off of this low. But you also have the 382 up at 72.88. So that's another factor to consider, is that it could go up to 71. Let's call it 71.20, and if it shows strength at this level, then my expectation is that it'll run up to 70. It looks like almost 7,300, but that's the expectation. So how do you get positioned for this? Is that any kind of a pullback down into 167.88 or 168.30? You can see these moving averages underneath this are going to be acting as support. The idea here is also to buy the breakout point. So if you get a pull down into 68.42, you're going to look for the market to actually provide support down here as well. Okay, so you can see the breakout point. That might actually be a pretty decent opportunity right there. So once again, I'm just watching these markets trade. I'm just keeping an eye on the intraday activity. For the most part right now, it does look like the market kind of got a little action on the European Open, but overall it looks like so you have the euro is trying to find some strength. It's trying to find its footing. You're also seeing the Swiss franc is trading lower. The Japanese yen is trading lower. I believe that the Canadian dollar, however, remember the Canadian dollar broke out above yesterday's high, but I think that's going to actually fail. So I'm thinking, that could be your opportunity to get short the Canadian dollar right now at 130, and then look for a push all the way down, maybe even to 128.50. Let's take a quick look at that. Here we are looking at the Canadian dollar. Now the Canadian dollar, if you zoom back, you take a look at the price action going to the beginning of the year of last year, you can see that actually this is the beginning of this year. Sorry, you have the beginning of this year connecting the lows. So I have to adjust this as well because we're not touching the low here, but it doesn't mean you're completely off. So let's just adjust that. Now you can see how the Canadian dollar is actually on the back side of this trend line. That's very fascinating. The reason is because when you study the dynamics of classic technical analysis, that will help you learn the idea that once you have a trend line breakout, which happened here. Okay, so the market came down, broke through the trend line down this, made a downward move, and then it came back up to the backside of the trend line. This somewhat would consider a viable trading opportunity. Okay, so now that we've actually pushed down below this long-term up trend line here, market came down, bounced, and then rallied, and here we are at the backside of the trend line. So some people are definitely getting short. You can see how the market actually pushed up here, and now we're actually getting rejected. So I want to be on alert here for the dollar pairs, the positively correlated pairs are in the midst of getting hit to the downside, and therefore that is going to add a bearish move, or that's going to add confidence that the dollar is probably going to move lower, which will help the euro and the pound and the Aussie and New Zealand go higher. All right, so I'm already starting to see the euro starting to kind of drift higher, which is what we want to see. Just waiting for it to pick up some steam. But in the meantime, the actual setup that I'm noticing is you have a nice setup here in the Canadian dollar, and then of course you also have a setup here in the Japanese yen with a break below the previous low. Almost the same kind of situation here in the Japanese yen. Notice that you do have a trend line here as well. Okay, so let's just see if I could actually, let's see if I can get this right. My line does not look correct, so I want to actually put it on the low there, and then across these lows, and it looks like there's a reason why we should be on alert here for the market to move lower. You can see how that there was a breakdown here beneath the trend line. Market came down, came up, used it as resistance, came down, came up, and right now we have been rejected at the 111.82, and the market is unable to get all the way up to the trend line, which is a sign of weakness. So in all likelihood, the fact that the remember, this is the daily chart, and this is where we should be anchoring our ideas. We should be focusing primarily on what's happening on the daily chart, because this is going to impact what we're doing on the smaller time frames. The you know, the ability to get, you know, say 50, 100 pips on a move on an intraday basis is derived from the ability to see the move on a higher time frame and then take advantage of it on the lower time frame. And that's why it's really important to actually pay attention to what's happening on the daily chart, because once you are able to identify the opportunity on the daily chart, then it makes it really easy to capitalize on it on the lower time frame. It's about 15 minutes before the London session opened. Okay, so once again, looks like we got about 10 minutes. We got a little over 10 minutes, 14 minutes, for instance, until the London session opens. I'm going to step away from the desk for a minute. I'll be right back.
to Bloomberg Markets. This is the European Open. We're about 50 minutes into the trading day. Donald Trump has hit out again at China, saying the world's second largest economy wouldn't outlast the U.S. in a trade dispute. The president spoke exclusively with Bloomberg's editor-in-chief, John Micklethwait, saying his administration was re-examining how to determine whether countries such as China are manipulating their currencies.
It is a formula, and we are looking very strongly at the formula. As you look, as you see what's gone, with the yuan, it's gone, they're trying to make up for lack of business by cutting the currency. It's no good. You can't do that.
The President of the United States speaking to Bloomberg's editor-in-chief, John Micklethwait. Let's turn our attention back to some of the corporate news we're paying attention to this morning. Whitbread, the UK-listed stock, is surging the most in almost 9 years. This after it agreed to sell its coffee chain, Costa, to Coca-Cola. The £4 billion deal comes instead of a plan announced in April to spin off the unit as an independent company. Joining us now, Lisa Fan, Bloomberg's European consumer reporter. What does this deal mean for Whitbread? This is a cleaner way of doing the Costa spin-off, effectively.
It is quite interesting. I was on a call with Alison Britton with some other journalists this morning, and she was mentioning how Coca-Cola had approached them just in the recent few months, actually.
Yeah, it happened fast, didn't it?
It was a very, very quick transaction, and I think that's part of the reason why we've seen the share price reaction that we have this morning, because it has been such a surprise. It has also been a higher sale than what others had been expecting, and analysts at Bernstein have written that this was higher than their valuations. So it is an interesting deal for Whitbread, and it is with the expectation that it's going to generate more cash for shareholders as well.
How did this deal come about so quickly? Were shareholder activists playing a big part in the way that this deal materialized?
It's hard to tell for sure. Alison Britton on the call did say that Elliott didn't have any involvement in this transaction with Coca-Cola, but as we know, Station Head had disclosed a stake in Whitbread in December, and then Elliott had also disclosed a stake in Whitbread in April, and a couple of weeks, or less than a couple of weeks after this stake disclosure, that is when Whitbread did announce the demerger. So it does seem that a lot of analysts think that this has increased the pace of Whitbread changing course.
In some ways, this is with kind of hindsight, this makes total sense. Coca-Cola doesn't have, this is the kind of the missing piece in the puzzle for Coca-Cola. They also have the scale, they have the distribution channels in which they can make this work, therefore they can probably pay a slightly higher price. Was anybody talking about Coke being a possible buyer?
It is interesting in terms of Coca-Cola and the fact that at the moment there has been a lot of backlash in terms of things like sugary drinks, and you are seeing these big consumer companies, they're trying to diversify their assets and their sales and revenue streams, and so in some ways it is interesting to
just taking a look across the board right now, you have really not that much movement at this point from the dollar. For instance, you see the top left hand corner, just a little bit of choppiness. The other thing that I'm watching are the rest of the pairs. The only one that's really moving on the upside is the Euro CAD. On the downside, you have the CAD Swiss, Aussie Swiss to the downside. So again, the Australian pairs are rather on their lows, but it doesn't seem like they're pushing aggressively. The other thing that I'm watching here is a recovery in the euro. I'm watching to see if that'll get back above its key moving average on the intraday basis. The pound actually had a nice test there of the 50 period moving average on the hourly chart. So I'm thinking that's going to give it actually a little boost here over the course of the next couple of hours. I'll be looking for the pound to probably reach up into the 130 area, 131 area if it continues to springboard off of this moving average.
This interview that we have with the President of the United States, but that's not the only interview we've done over the last 24 hours. Matt Miller, over the last few minutes, has been talking to Ollie Wren, getting his response to what the President of the United States had to say yesterday about the European Union and its trade policies, the comparison with China being made there. We've also been hearing from Tian as well, his comments on what has been happening with the emerging will be breathing a sigh of relief that August is over. There's been a torrid last month for the emerging markets. Argentina and Turkey, two clear factors on all of this. But it has been something that has been a very difficult month. And maybe the flow story, Matt, will improve as we go into the beginning of the next month. But I think the real standout story this morning, Matt, is the president, his comments on the WTO, and his comments on Europe as well. Those comments coming back from John Georgiuka and from your interview with Ollie Rehn, quite prickly in some ways.
Yeah, absolutely. I thought it was very interesting to see also that the trade war with China has in some ways been priced in. At least we didn't see beyond the initial negative reaction that eventually got smoothed out throughout the trading day, too much damage to prices in Asian equities. Whereas here in Europe, we see equities down across the board, no matter what index you look at. And then you see, as you mentioned, all of the car makers down. So whether it's Volkswagen, BMW, or Daimler, all taking hits. Deutsche Lufthansa, of course, not helping the situation in Germany, so the DAX is the softest. But this wasn't priced in. European investors didn't expect Trump to come back with the EU so quickly, especially after Cecilia Malmstrom offered to get rid of not only car tariffs, but all tariffs if the U.S. wanted to. Donald Trump says, not good enough. Don?
Matt, I've got 90 seconds to do battle of the charts, so let's get that done right now. We have Danny Berger is going to be involved in this, and we've got Amory Hall. Amory, kick it off.
Guy, I'm looking at my leads from yesterday, so I wanted to try my luck again at the peso. It's hit a record low, down some 12% against the U.S. dollar. Worst performing emerging market currency for the year. Battling it out with the lira for the worst on the month, but it's not even part of the MSCI Emerging Markets Currency Index yet. You can see here, now those two are linking even more so, and they're jumping to parity this week, one of the highest we've seen this year. So it's not part of the index, but increasingly so. That MSCI index is following it lower.
Danny?
I'm taking a zoom out on all EM currencies. Very volatile now for some of the reasons that Anne-Marie pointed out. Just how volatile. Look at the spread between EM and G7 currencies. This is the most they've diverged from 2009. So very volatile, and we're looking out to see if developed market currencies...
Just a couple minutes here until the London session opens.
These two tend to be correlated.
Yeah, interesting chart. Danny, you're going to win this morning. Thank you very much indeed. AMH, another tough morning for you. But I'm sure we'll all pay for that later. Throughout the day, we're going to be bringing you Bloomberg Editor-in-Chief John Micklethwaite's exclusive interview with the US President Donald Trump. It took place yesterday in the Oval Office. He said many market-moving things, and we're going to continue to bring those out throughout the rest of the day for you. This is Bloomberg.
Alright, so I got a couple seconds before the London session open here. Looks like activity is a little up. We got just keep an eye on these the activity level here. The activity overall is definitely giving me something to get excited about in terms of the order flow.
The single worst trade deal ever. President Trump threatens to leave the WTO if it doesn't shape up. He spoke to Bloomberg in an exclusive interview. Shrugs off trade tensions. The Credit Suisse CEO tells
Okay, so keep an eye here on the well, the Swiss franc right now is trading on the lows. That's the big emphasis. Got the Japanese yen trading on its lows as well. Euro and the pound are positive. They're acting nicely. In other words, they're going. They're bullish, or they're moving higher incrementally, although.
In London, let's check in on the markets. And in the equity markets, the focus does very much seem to be on trade. Many comments from President Trump on that, not just about the WTO, but also about China.
Given the fact that the Swiss franc and the Japanese yen are moving lower, I'll be expecting the Canadian dollar to actually start to catch up.
Losses in the US yesterday and some weakness in Asia, and it is car makers that are actually leading the losses in European.
That's going to set the tone for the rest of the morning, in my opinion.
Is what we're keeping an eye on today. EMFX in particular.
However, you might not actually get any kind of a movement until the New York session.
Since 2015, the Indian rupee hits a record low. Interestingly though, the Turkish lira strengthening, 656.61, and this even though we've seen weakness in other currencies. Of course, we mentioned the peso at the top from yesterday, but also the South African rand dropping to a 2-year low. But let's also take a look at Whitbread shares, if I can get out of the way so you can see them, because what we've seen is that it's announcing that it was selling Costa Coffee to Coca-Cola. So basically, Coca-Cola agreeing to buy Costa Coffee for £3.9 billion. That's about $5 billion. Stepping into that battle with Starbucks. And we've seen Whitbread react, jumping at one point as much as 19%, the most since 1992 for Whitbread shares. We'll talk more about that later in the hour. And throughout today, we will bring you Bloomberg Editor-in-Chief John Micklethwaite's exclusive interview with US President Donald Trump. That's definitely something to look out for next. But first, let's get the Bloomberg First Word News. Here's Taylor Riggs. Taylor.
Argentina's currency crisis has deepened as an emergency interest rate increase to 60% failed to stop jittery investors from pulling their money out of the country. The peso extended losses after the bank raised its benchmark measure by 15 percentage points to a global high. The hike, which is the second this month, was the latest attempt by policymakers to defend a currency that's lost more than half its value this year. Indonesia's rupiah slid to a 2-decade low, spurring intervention from the central bank as investors dump Turkish and Argentinian assets. Countries with large current account deficits, such as Indonesia and India, have also seen their currencies and bonds come under selling pressure. The rout in the Argentinian peso and Turkish lira, and the recent stability brought by Bank Indonesia's 4 rate hikes since mid-May, which has led to a return of foreign funds into its debt markets. Legendary investor Warren Buffett has told Bloomberg that the U.S. banking system is, quote, in great shape. The Berkshire Hathaway chairman and CEO also said he's still buying stocks, even amid record Wall Street highs.
I'm buying stocks, but I'm not buying them because I think they're going to go up next year. I'm buying them because I think they'll be worth quite a bit more money 10 years or 20 years from now. And I don't know whether they're going to go up or down tomorrow, or next week, or next month, or next year. I do know they're good businesses.
UK companies became more pessimistic in August as concerns that Brexit will hurt growth increased. According to a survey by Lloyds Bank, business confidence slid to the lowest level since December, with both trading prospects and optimism towards the wider economy declining. Only 21% of the companies intend to increase hiring over the coming year. That's down from 30% in July. Global News 25 is the day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Taylor Riggs. This is Bloomberg. Naira.
Thanks very much, Taylor. Now, President Trump has threatened to pull out of the World Trade Organization if it doesn't treat the US better. He spoke exclusively with Bloomberg's editor-in-chief, John Micklethwait.
I would say the WTO was the single worst trade deal ever made. And if they don't shape up, I would withdraw from the WTO.
And in another sign, the trade disputes between the US and its allies are thawing. The president dismissed the EU's offer to scrap tariffs on auto imports.
It's not good enough, no? Not good enough for now. Because they do a lot more auto business than we will ever do. In other words, well, first of all, it's not just tariffs. They also have barriers up to our cars. They'll take the barriers down, and they'll charge us no tax. But it's not good enough because they will always sell more cars. Their cars, their habits, their consumer habits are to buying their cars, not to buying our cars.
European Commission President Jean-Claude Juncker responded this morning saying the EU will retaliate if Trump raises car tariffs. And joining us now for more is Rosalind Maxson, our International Government Executive Editor, and joining us for the hour, Christian Keller, Head of Economic Research at Barclays, and James Affey, Senior Investment Manager at Aberdeen Standard Investments. Before we get to the trade story, just want to quickly break some news coming through from the Bank of Japan. The BOJ lifting the size of some September JGB buys and cutting its purchase frequency. So that's something to keep an eye on. Not sure if the yen is reacting to that. I wouldn't expect necessarily that it would react too much. Dollar yen off by 0.2%, 110 spot 77. But that is pretty much what we've seen for a lot of the session.
So once again, just being patient here.
Trade story. And Rosalind, we had a number of things from President Trump. Great to see you this morning, by the way. A wide-ranging interview where Trump talked about the WTO, the EU, and China. Tying it all together, did it come through as a more hawkish stance from the president?
Well, certainly it's his long-standing views on a variety of things, but it tells us two things. One is that with Donald Trump, everything is a deal, good or bad. So even if you're a long-standing US ally of many decades, a partner in security, he's going to look at you and say, well, what am I getting from you? Am I getting disadvantaged by you? He's very transactional. The other thing that his comments tell us is that he's under pressure at home. He's coming up against the midterms in the
So as you sit here and wait for the London session to open,
China, Mexico, Canada,
overall,
Korea,
the mover at this point
even waded into South Africa.
is the Swiss franc, and you can see that the pound and the pound and the euro are still kind of quiet. So I think that they're probably not even going to move until the New York trading session. But the other thing that I'm watching here is the Canadian dollar. That looks like the Swiss franc, the Canadian dollar, and the Japanese yen are actually the ones that are really sitting at the top of my list in terms of watching to see if something I can take advantage of. In terms of the Swiss franc, I need to get a pullback to the moving averages. Right now it's overextended and we're sitting at the lows of the trading session, so I think I'd like to get some sort of a push back up to the moving averages in order for me to get situated to the short side. The problem with that is that by the time that happens, the New York session could be underway, and then all of a sudden focus probably switches to something else. The Japanese yen is kind of in the same boat right now. We're just starting the very beginning of the move where we're actually slipping below the key moving averages that I'm looking at, and with that in mind, that basically is giving me the I guess you would say the heads up that I'm looking for in terms of getting short the Japanese yen, but we still have a little ways to go before I can actually get positioned. I need to wait for this market to give me something to do. Now on the opposite side, right now the Canadian dollar is pushing up into it looks like the daily 50 period moving average, and we're finding, remember, the backside of that trend line that we were looking at a minute ago. The other thing that you could see is we're pushing up into the 4-hour 50 moving average as well. So we are trading at resistance in the Canadian dollar. The problem is that it's still looking a little strong in terms of putting intraday higher highs and higher lows that have not rolled over. The Canadian dollar has not started to roll over or push below those key moving averages with any kind of conviction just yet. And I think that's probably going to be something to keep an eye on going into the New York trading session. As it stands right now, it looks like the London session is trading rather actively, which is what I want to see for an intraday trader. In terms of any kind of movement, like I said, the Japanese yen is really looks like from a movement type of currency strength or weakness type of basis. It looks like it's the one that's actually starting to make its maneuver or move at this point. Across the board, the Euro CAD is the strongest at 0.39%, and then the CAD Swiss is the weakest at 0.59%. And in the meantime, like I said, when we switch back to what I'm looking at, the the Canadian dollar here, you can see this Canadian dollar is bouncing, or at least is coming up to this this key trend line, and I'm thinking that's going to be a level that we need to focus on, because if we can stay below that level, then the idea is that this market will start to roll over and give us a nice little setup to the downside. So patience is the name of the game here. The dollar has been trading for the last 4 sessions right at the daily 50-pair moving average. Seems like it just wants to sit there, which could be the case for the rest of the day. I'm okay with that. I wouldn't be surprised if this market just kind of settles down and really doesn't do anything until later. But as it stands, like I said, the activity meter is really giving me a little bit of excitement. You know, a lot more activity out there than the past couple of days, that's for sure, around this time. Japanese yen on the lows.
All right. Thank you so much to Rosalind Matheson, our International Government Executive Editor, and James Ackley from Aberdeen Standard Investments, and Christian Keller from Barclays. Stay with us. Now, coming up, Talking Trade with Tidjane Thiam will bring you our exclusive interview with the Credit Suisse CEO next. This is Bloomberg. politics. This is Bloomberg surveillance. I'm Mayor Chevich in London. Now let's get the Bloomberg Business Flash, and for that, here's Taylor Riggs. Hey, Taylor.
Mayor, U.S. President Donald Trump says he's considering a capital gains tax break. The capital gains change would slash tax bills for investors when selling assets, such as stocks or real estate, by adjusting the original purchase price for inflation. He made the comments in an exclusive interview with Bloomberg's editor-in-chief, John Micklethwaite.
Thinking about it. I'm thinking about it. No, I just, there are a lot of people that love it, there's some people that don't. But I'm thinking about it very strongly.
And white bread shares have soared in London trading this morning. That's after it agreed to sell the coffee chain Costa to Coca-Cola for £3.9 billion. The British company says that's 16 times this year's earnings before interest, tax, depreciation, and amortization. White bread said the majority of proceeds will go to shareholders. And China's regulators plan to limit the number of new online games and the total number of titles. This is all as Beijing tries to mitigate the impact of gaming addiction among the nation's children. The new measures come on top of a freeze in game approvals nationwide and further muddies the waters for the industry. Shares of game-related stocks across Asia fell on the news. And that's your Bloomberg Business Flash. Naira.
Thanks so much, Taylor. Now, emerging market assets are heading for a monthly loss as declines in Argentina and Turkey sparked fears of contagion. But Credit Suisse's CEO doesn't think it will spread. Tidjane Thiam spoke exclusively to Bloomberg's Tom McKenzie about risks, the ECB and Brexit.
Well-managed economies are safe. There is no emerging, there are no such as emerging markets. Well-managed and less well-managed economies. Economies that have a current account surplus, that have public finances in order, so don't go at deficit, and have significant foreign exchange reserves are safe. And the market, when people fear contagion, they are wrong. There's no contagion from poorly managed economies to well-managed economies. The countries that have gotten under pressure it's easy to understand why. It's because they have a significant, often a current account balance problem, and that makes them vulnerable. It's not because they're emerging markets. It's important to have to manage the fiscal situation responsibly. It's important to be the current account surplus, and it's important to have significant foreign exchange reserves. And you will find that a lot of emerging economies are in that position. The ones that have come under pressure, as Turkey or Brazil, have more fundamental macroeconomic problems. I was in Argentina 2 months ago, and I met all the senior authorities there, and it's clear that Argentina has some real challenges to deal with, but to extend that to other emerging economies is too simple.
So in terms of the contagion from Turkey in particular, you think that risk has been overplayed?
I don't believe there will be material contagion over time. In the short term, there's always a kind of very strong, spontaneous reaction, but it's not justified.
And the impact on European banks?
It's manageable. Banks are in a much different situation than they were back then. You look at the size of the Turkish economy, with all respect, and I'm a Turkey bull. I've done previous careers and very good transactions in Turkey. I'm actually very positive medium long term in Turkey. You can tell that why, but the demography is one of the key reasons why. So, the banks have reasonable exposure. The banks we're talking about have reasonable exposure to Turkey, and it will be natural.
Has Credit Suisse had to unwind any positions in it?
Minimal exposure to Turkey, very minimal.
In terms of Italy, you see concerns there about their debt, of course. There was reasonable appetite for yesterday's auction, but the yields have picked up slightly. Are the markets underpricing the risk coming out of Italy?
That's a tough question. I'll be very cautious in any situation to say that the market is mispricing things. Look, I am not close enough to that situation to have a strong view. I think we need to see how things evolve in the coming months. I'm not too close.
Would you expect the ECB potentially to step in at some point to support their?
No, the ECB has a very clear objective to try to manage inflation and promote financial stability. And I think if we do what's necessary, we've seen over time. I think the euro is very resilient. I think that the political will behind the euro. I was never worried when
etc. in Spain. I was never concerned because history is very important. Europe has a rich history, and I think that all the decision makers are determined to do whatever is necessary in the end to ensure that the euro continues.
That was Credit Suisse CEO Tidjane Thiam speaking exclusively to Bloomberg's Tom McKenzie in Beijing. Now, no regrets. President Trump says he doesn't regret appointing Jerome Powell as Fed chairman, even after criticizing interest rate hikes by the central bank. He made these comments in an exclusive interview with Bloomberg in the Oval Office. Still with us, Christian Keller from Barclays and James Appley from Aberdeen Standard Investments. Guys, we've had comments from Trump on a number of things, but when it comes to the Fed, look, everyone had stars in their eyes at Jackson Hole as Jerome Powell spoke. And I want to ask you, because we keep talking about our star, but James, actually, you want to focus as well on what Bloomberg's calling FAR star, and this is the financial stability star. Different picture to the neutral rate.
Yeah, absolutely. I mean, I prefer not to call it any kind of star, to be honest. I think it's a bit click, but yeah, I read that article a few days ago, and it was a bit of a hallelujah moment. Obviously, that's been coming because of the way that Jay Powell has been communicating, because of the way he's been managing policy. To me, it's a philosophical question. This is not about the academics underlying. This is not about the economic theory. This is about the notion of making decisions under uncertainty, what you can and can't know, and things like R star, where it's a very, very difficult real-time estimate. Using that as your guiding star actually has historically, we can see now, lead to a number of errors. And obviously what we've seen in the build-up to 2008 is that inflation is not a sufficient measurement of the potential for instability to build up in the system, particularly in financial markets. So I find it difficult to separate, as some central banks and central bankers do, the notion of monetary policy and financial stability. They are two sides of the same coin. You cannot achieve your monetary policy goals if the financial system is unstable. So Jay Powell, I think, is doing a phenomenal job, and I think he's a shift away from a very pure academic approach to one which is far more holistic and pragmatic, and I think that's very healthy.
Right, and you say that this could be a philosophical discussion, but actually in some ways it does have implications for monetary policy, in the sense that the paper that everyone was talking about in Jackson Hole as well was what to do under these conditions of uncertainty. And I've kept asking people, Christian, whether actually the Fed should
looks like the activity level is just diminishing.
Taking a faster hiking path than what's being signalled, or than what markets expect. Financial stability maybe should come into that.
Yeah, it's a very difficult question, right? Because even in theory, if you say you do want to do that, you could precipitate actually the instability that you want to prevent, right? Right now, with our economists for the US are actually quite aggressive. We see not only 2 hikes this year, but 4 hikes next year. But then you get into the question, would that invert the yield curve? Now, we know that the market is really focused on this, but every recession was preceded by inverted yield curve, and then the question is, could that signal that you send by inverting the yield curve, raising rates 6 more times from now, suddenly precipitate that kind of a sell-off in the equity market, and suddenly create the financial instability you wanted to prevent by hiking rates? So, long story short, I agree on Powell. I think he's a very concise communicator. I think it's refreshing. To some extent, PhD economics, I'm an academic myself, but I actually think that the new path he has of just saying as it is, and also reducing the importance of R stars, of dots, and the ability to forecast things is refreshing. It is also adequate, I think.
Yeah. James, you're nodding along. Anything to add to that?
Yeah, I completely agree with Christian. Again, this is very difficult. I think for me it's all about, and this is something that Jay Powell talked about in that speech at Jackson Hole, it's all about the middle ground. If you are to look at the potential costs of a single sort of policy step or policy path, you need to weigh that against the potential benefits, or indeed the potential costs of another path. And so I think the major shift here is away from the notion that in a situation where you're uncertain, it is costless to be dovish. There has been an approach from central bankers for 30 years or more now, whereby if in doubt, you're dovish because that costs less. And I think that's a very short-termist judgment, because it's very easy to see if you hike and markets and indeed the economy react badly quite quickly, you can say, oh, I've made a mistake. Whereas if you keep policy too easy for 5, 10, 15, 20 years, those build-ups of instability, much more difficult to spot until they hurt you really badly, as we saw in 2008.
Yeah, that's a good point. Costless of being dovish, and brings us neatly onto the BOJ. Of course, we got some headlines this hour saying the BOJ lifting the size of some of its September JGB buys and cutting the purchase frequencies. Is central bank divergence going to be as much of a strong story in 2019, Christian?
Yeah, I think it will continue. We have a situation whereby, if the Fed moves ahead, then, we have all reasons to believe that they will, because the U.S. economy looks in good shape. We have an ECB that is in a very difficult situation, having very low inflation, already signaling they will not move rates until September or so, and then not even knowing how far they can go then. They still have a negative rate of 14 basis points. And then the BOJ is really a bit of a bind. I mean, we just saw the headline here coming in. Not really sure. They're already not able to buy as much as they officially declare, 80 trillion a year. Now they're telling us they're going to buy more in September. We have to look what it actually means. But the BOJ is already acknowledging something that James has said. They lived with a flat and negative yield curve at the short end for so long that it really starts hurting the financial system and becomes counterproductive. And they don't know how to get out of it. I think they would like to, but they don't know how to manage it. And all the other central banks are risking whether they could get in such a BOJ scenario, in particular the ECB, I think.
Yeah, James, how does this BOJ news and the BOJ policy feed into global asset allocation?
I think it's incredibly, not necessarily this step, because I can't quite understand what this step really means. I need to look at it closer. I say that a lot actually about central bank actions, I have to say. But in terms of the medium-term outlook and BOJ policy, I think one of the things that we as investors got wrong in 2017 and potentially before that was how powerful BOJ policy was at locking down their 10-year yield and leading to that financial repression to go offshore and lead to treasury demand, for example. So the reversal of that process, more hawkish DOJ's been, JGB's been more attractive to domestic investors, could be a big hit for demand for French bonds, US government bonds, German government bonds.
Yeah,
that's probably important.
The 10-year JGB yield trading at 0.1% right now, 10 basis points. James Ackley from Aberdeen Standard Investments and Christian Keller from Barclays stay with us. No end in sight for Argentina's currency crisis meanwhile. Coming up, we discuss why an emergency interest rate rise failed to stop investors from fleeing. This is Bloomberg. politics. This is Bloomberg Surveillance. I'm Neera in London. Now let's check in on what's trending across the Bloomberg universe. On TikTok, Coca-Cola has agreed to buy Costa Coffee for £3.9 billion. The soft drink giant is buying the UK brand from Whitbread to step up its battle with Nestle and Starbucks in the hot drink space. On Bloomberg.com, Trump has made clear that Europe won't escape his trade ire for long. He rejected the EU's offer of no auto tariffs and said the bloc is almost as bad as China, just smaller. And our most read stories on the Bloomberg terminal. In third place, Indonesia's rupiah falls as EM pain spreads. In second, Warren Buffett buys more Apple, saying the iPhone is enormously underpriced. And top, Trump is said to back $200 billion of China tariffs next week. You can check out all that across all of our platforms. But now let's get the Bloomberg First Word News, and for that we've got Taylor Riggs. Taylor.
Neera, U.S. President Donald Trump has threatened to pull out of the World Trade Organization if it doesn't treat his country better. He has long called for the U.S. to take a more aggressive approach to the organization, arguing that it is incapable of dealing with a non-market economy such as China. America withdrawing from the WTO would potentially be far more significant for the global economy than even Trump's growing trade fights. He made the comments in an exclusive interview with Bloomberg's editor-in-chief, John Nicholson.
I would say the WTO is the single worst trade deal ever made. And if they don't shape up, I would withdraw from the WTO.
Donald Trump has rejected the European Union offer to scrap tariffs on cars.
Once again, just hanging tight while the market just flops around. Japanese yen looks like it briefly went through that 110.70 area, back up above. For some reason my charts are not updating right now.
Because they do a lot more auto business than we will ever do. In other words, but first of all, it's not just tariffs. They also have barriers up to our cars. They'll take the barriers down, and they'll charge us no tax. But it's not good enough because they will always sell more cars. Their cars, their habits, their consumer habits are to buying their cars, not to buying our cars.
Legendary investor Warren Buffett has told Bloomberg that the U.S. banking system is, quote, in great shape. The Berkshire Hathaway chairman and CEO also said he's still buying stocks, even amid record Wall Street highs.
I'm buying stocks, but I'm not buying because I think they're going to go up next year. I'm buying them because I think they'll be worth quite a bit more money 10 years or 20 years from now. And I don't know whether they're going to go up or down tomorrow, or next week, or next month, or next year. I do know they're good businesses.
Global news 24 hours a day on air and a TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Taylor Riggs. This is Bloomberg. Neera.
Thanks so much, Taylor. Now, it's been an ugly August for emerging markets, and Argentina is one of the latest casualties. The country's currency crisis deepened after an emergency interest rate increase to 60% failed to stop jittery investors from pulling out money. The record rate hike was an attempt by policymakers to defend the peso after it lost more than half its value this year. We're now joined by Srinivasan Sivabalan, Bloomberg's emerging markets editor, and still with us, Christian Keller from Barclays and James Ackley from Aberdeen Standard Investments. Srini, great to see you as always. So what I feel I've learned this morning from what happens in the Indonesian media and what happens with the peso yesterday is that rate hikes don't always work.
Doesn't work at all, particularly if you are too late to the party, right? It's all about the timing, where you have to be ahead of the curve if you want your rate increases to work, and your problem has to be monetary. It shouldn't be fiscal. What's happened in Turkey and Argentina and other places is that what started out as a monetary problem has become a fiscal problem. And the dichotomy between a growth-oriented government and a hawkish, eventually hawkish central bank, working at cross purposes against each other, and policy responses don't really work.
Yeah, and talk me through what's happening in the emerging market space today, right? Because every time we get a circle one policy, we start questioning whether there's contagion. If I look on the Bloomberg and emerging markets against the dollar, right, the Indian rupee has been hit, new record low. Rupiah hit. Of course, we've already talked about the peso, but the Turkish lira is actually strengthening in the
Yes. If there is any contagion, it is more sentimental, not fundamental. And Turkey,
appreciation for you, James, is that present even though you're overall bullish on emerging markets?
Yeah, I think differentiation, to be honest, dispersion of asset class, asset performance, yeah, one of the features of 2018, and that's exactly what we expected and what we continue to expect. One of the underlying, the major underlying cause of the market moves we're seeing this year is the withdrawal of the liquidity tide. QE has become QT. Dollar liquidity offshore is being squeezed. And, to quote a far more famous investor than myself, it's only when the tide goes out that we see who's been swimming naked. And to some degree, that's what we've seen here, is that this is very much driven by the dollar. And as Srini's already said, contagion maybe is the wrong word. There is a correlation between emerging markets. Why? Because they appear in the same benchmarks. If an investor chooses to sell the asset class because they see bad news in Turkey, the knock-on effect is that they're selling in other emerging market economies as well. So, yeah, absolutely dispersion, but I still think that this is a nervy time for the emerging asset classes.
Christian, to come back to the point that Srini was making about sort of the fiscal versus the monetary position as well, how much of this can be simplified to simply staying away from those markets that have current account deficits?
Well, the simple solution, I'm not sure whether it is necessarily the right as an investor that's smart, but it's something that is value. And I think what it is about is basically having a credible policy response. If people feel you cannot deliver on the fiscal, your central bank was fiscal, and at 50% on your central bank overnight rate, that necessarily doesn't happen. If you do it in coordination with, saying, look, I will adjust my fiscal no longer incrementally, as Argentina already emphasized, but I do steps that are credible to reduce the deficit in a way that we believe with fiscal. I think the interest rate might still impact and works. But it's a matter of the same as Turkey. I think it's a debt bond, debt cut bonds. There is no credible program whatsoever, and there may be little bits here and there, some fine tuning, but the real bonds today, I don't mean anything for the federal.
Trying to be a dollar strength coming in.
What's more important as well is where emerging markets go from here in terms of looking at the dollar, but then also looking at what happens in China and the stability of the.
Really nothing to get excited about at this point. So once again, during the London trading session, the market open was actually a little quiet this morning. So it looks like the market had already made its move sometime around the Japanese trading session, and at this point, just kind of waiting for the market to actually pick a direction if it's going to do anything. Again, it's Friday. There's a tendency for this, things to actually settle down or be quiet for that matter, but what we can do is only sit and wait and let the market actually present an opportunity and then take it. If it's not there when the market is open, then we have to sit and wait. Right now the activity level is a little high. It's definitely better off than it has been over the last couple of days, but we don't really have any 1% movers, which is really what I like to look for. I like to look across the board and see if any market has been either moving up or down above 1%, and right now you can see that everything is really trading between positive 0.3% and negative 0.5% with the dollar index futures right now sitting at negative almost 0.2%. We're still sitting at that major support level in the dollar index futures. You can see this important level of support right at a trend line. So when the market decides to pick a direction, whether it's going to go up or down, we'll see and have to wait until then. In the meantime, again, keep an eye on the Swiss franc, the Canadian dollar, and the Japanese yen, because those are the ones that are actually presenting me with some pretty decent ideas. At least the Canadian dollar, for that matter. It seems like the train has already left the station for the Swiss franc and the Japanese yen. So that's about all I got for this particular session, folks. If you have any questions, don't hesitate to reach out. Mail at garciaresearch.net. I'm Andy Garcia. I'm signing off. I hope you have a great weekend. I look forward to seeing you at the next update.